Hello and welcome to the Green Profit Academy Pros podcast. This show digs into the challenges in growing a lawn care and landscape business while maximizing your profit. I'm Christeen Era.
And I'm Steve Bousquet. We are the green industry experts in profit, growth, and leadership. Welcome to today's podcast at Green Profit Academy Pros podcast. Today we're discussing the concept of the business journey. We'll unpack the various stages that a business goes through to achieve its goals, from its inceptions to achieving success, and what the common mistakes that we make as entrepreneurs. Welcome to today's show, Christeen. You wrote a really good agenda for this. I thought it was super thorough, and it's going to give a lot of good talking points. So why don't you lead us off?
Yeah, I thought it would be fun to kind of switch it up and just get back to the basics and talk about the concept of a business journey. And so I put together kind of an agenda to talk about where does it start? What places does it go? What stages does it go through? Because as entrepreneurs, I know I didn't think about this when I started in business all those years ago. And, thinking about kind of the evolution of a business. And a business moves through various stages to achieve its goals, from inception to achieving success. So what are those stages? So I want to talk about that today. So there's a comprehensive approach to understanding the journey of a business, including the factors that influence its growth, such as market trends, competitor analysis, sales, marketing strategies, and operations management. And these are milestones that a journey goes through. So I know, Steve, you've gone through these kind of unknowingly and knowingly through the stages of your business. What are some of the things that stand out most to you, kind of reflecting back at your business's journey through these stages?
How fragmented everything is, and it becomes, and the busier or the day more I spent in the day-to-day producing revenue, it took my focus off the big picture, and we talked about the 5 functions: business, marketing, sales, deliverables, finance, and people. And it's pretty comprehensive. And, had short lists or goals for marketing, sales, deliverables. The finance part was where I kind of was lacking the most. I really just was working as hard as I could and generate as much as you can. And then the people, I really fell short. It was like recruit and onboard, and then there was no development after that. And now we have a development plan, but it was really about having too short of visions in all of the functions of business.
Yeah, and I think too, I see that there's typically not a plan. There's not like a little plan, or a big plan. So those goals leading up to those things of, well, how are we going to do this? And just this concept makes me think about the survival trap in a business. And Mike Michalowicz talks about this in Profit First. He talks about this in Pumpkin Plan, and he unpacks the survival trap. And I feel like the survival trap is a perfect depiction of what we do instead of connecting with the journey that our business goes through. And even as an entrepreneur, because we're focused on that top line revenue, and that's going to solve all of our problems. And we go and we chase all these other things, like let's open up another business, let's offer another service offering. What else can we do? Let's run a discount, or a sale and generate that revenue, instead of really staying focused on what your mission, vision, and purpose is, all the little things that support that dynamically in a business, and putting a plan together, to get there, like mapping it out.
Yeah, and it's one of those things. I fell into that. Okay, we're doing this one service. We're not making money in that, so let's add another service. We're not making money in that, so let's add a third service and then a fourth service. And next thing you know, we have 10 services that we're not making money at, and we're spreading all our talent and our capital resources over this 10 service. And just getting that one one service profitable is really the goal for it, and then being super efficient in it and having a really solid plan all the way through deliverables, finance, people, marketing, and sales. So, and being realistic, I've heard people say, "Oh, I'm doing 500, and next year I want to do 6 million," and that's just almost like such an unrealistic goal. It's self-sabotaging, and when I ask them to share the plan with me, they just look at me like, "What plan?" And I'm like, "Okay, no, let's have a reality conversation." And I did that. I made up different reality kind of goals, and some of them weren't actually big enough. Some were too big, and then I overcompensate and kind of went backwards. But basically, I mean, as simple as a plan for growth and how much revenue per person that you need to generate, and how much. So if you have the average employee needs to generate at least $125,000 in landscaping, so a two-man crew needs to generate $250,000. So, if you want to do $1 million, that's 8 guys that you're going to need in most landscape businesses for landscape maintenance. And so just knowing what landscape maintenance generates, what landscape installation, what lawn applications generate, whatever deliverables, knowing what the expectation is a basic way to start a plan. And I would say only 5 to 10% of the people. I was not doing that, so it's not a common thing.
Yeah, and what I'm hearing you say, like the concepts that you're sharing is know like how many people you need to generate X amount of money. What does each person generate in revenue for your business? And that's really it. It may sound like it's oversimplifying it, but it really is, keeping it simple and just starting off with the basics of like 1 + 1 = 2. And I think when entrepreneurs get into business, we've talked about this before, they're great at their craft, but they're not, so much great at everything else. Maybe that, they're not great at the math, or they're not great at the marketing, or, the people, or whatever it is. And what you're explaining is kind of like multiple baby steps missed just to get started and know, okay, how much does one guy produce in revenue? What does that look like? And, how am I profitable with that? And then just slowly adding little things into it and making adjustments.
Yeah, just being really intentional. And one of the things that happens in the spring, we go from 0 to 60. The summer is kind of busy, fall is busy, but then winter comes, it gets slow. Then all of a sudden we get inundated with work, calls, leads. In the spring, we're like, oh, we need more people, we need more people. So we start throwing people at it. And next thing you know, we have too many people per dollar revenue. And it needs to be super strategic. And, how many man hours is that $250,000 that maintenance crew needs to generate, and how much is that per hour, and we have to recover overhead, and we need to get margins. And so these are discussions that really are a big part of the business journey. And once you get the very basic foundation, then it's much easier to grow without taking major steps back. Because I did it, you grow, 2 steps forward, 3 steps back, 1 step forward, 2 steps back. But if you have a really solid foundation financially, and I mean, for all the 5 functions, then you can grow one step at a time without taking steps back.
Yeah. And I can say, from experience, it's less stressful when you do it that way too, instead of, trying to charge the mountain and conquer all of it at one time.
Yeah.
So a quote that I really love that applies to this is the journey of 1,000 miles begins with a single step. And we've heard this before to where it's like, oh, take baby steps, just one step at a time, one foot in front of the other. And it's very logical, I think, to connect with this, but we don't think about it when we're in the trenches of our business is just one little step at a time, and we will get there. And, I always say we have to walk before we can run.
Yeah. Slow is fast, which is one of my favorite sayings. Yeah.
So I want to talk about the stages of a business journey and what they typically include. And we're going to share some of these and give like the overall concept. So, the business journey concept provides a roadmap for entrepreneurs and business owners to navigate the challenges of building and scaling a successful business. And I want to take a little bit of time today and focus on this area to talk about each one of these.
Sure. So we're going to talk about the idea generation. So the first stage of the business is coming up with the idea of what we're going to do, what it looks like, where we're going to do it, how we're going to get it done. And that can be grandiose thinking, and it can also just be not knowing. So a lot of times, we see other people do things, like I'll take power washing, soft washing, right? So I've been watching that on YouTube, and I'm like, oh, that looks so easy. What a simple thing that is. But 10 videos in, I'm like, okay, you got to get the ratios of cleaner right. You can only be so many gallons per minute. You have to have the right surfactant. You have to cover all the outlets. Don't get on any. It went on and on. So a lot of times, people will see something, and somebody who's really good makes it look super easy. So like, that's easy. I'll get into that business. But really, you have to do a lot more research and take time to do it. So, the first stage of the business, though, is generating that idea and coming up with something that is either not being fulfilled in the marketplace or you think you can do better.
Mhm. Yeah, and I feel like that's how a lot of landscape, our lawn care companies get started is they're like, oh, I can mow lawns, I can do maintenance, I can do this, and maybe they're just tired of their job and it's something that they pick up, or they start helping out, several friends or people in their community and they start picking it up, or it's something they start doing, even like irrigation work or something on the weekends to help fund their family vacation for the year. It's like a little side job. And then they start realizing, oh, I can make a business out of this. And then the next thing you know, their business is running their life and they're sitting there going, but where's all the money? How did I get here?
Right. Yeah.
So,
So the idea generation is first. The next thing, is kind of the feasibility study. What involves what does it take research like to be viable in this marketplace? Is the offering, like I know down in like Texas, holiday lighting is huge down there. It's such a big business. In Connecticut, in my area, we did a feasibility study on that, and there we did not get a lot of traction. The only traction that people had interest in was municipalities. And, that meant bucket trucks and all this stuff, which we did not want to do. So, you have to do a little bit of market research. Will this support this? Even for lawn mowing, like how many, usually in a neighborhood or a market, there's one or two guys that kind of own that market. So what's the feasibility of starting a lawn mowing business? And if you are going to do it, how are you going to do it?
yeah, and this really ties back to pumpkin plan strategies that we've talked about before is knowing your market. You may be in your market and the guy down the street has a similar business to you, but how profitable is he really? Is he really fulfilling or serving the needs in your market? Are you offering the services to your market that generate and, create a profit center in your company? Is there services that you could get rid of in your business to understand better, you know, this is what my market needs and wants, and this is what they're willing to pay for. So I could do less for more money, fulfilling this need, and also looking at the capacity of their crew and really focusing on those services that the community needs. So I think there's so much that can go into researching the market and the viability of the business idea. And you may have several in your business model that you're presenting, especially, in landscape and lawn care, but which one is most desirable? Is there anybody in the market that has really cornered this service offering to where they are the expert and you could be the person that they call? And that is a huge opportunity, in any market to become that expert, because then you become high demand.
Yeah, and asking around and seeing if people will pay for it, instead of asking if it's just a good idea, how much would you pay for this? Would you buy this? And then starting to roll that out a little bit. We've been doing organic lawn care for over 30 years. And when we first rolled it out, it was to solve problems. So I didn't roll it out to like not use chemicals. We rolled it out to, hey, you have really bad thatch in your lawn. I have this organic product that eats the thatch up and makes the lawn better. You've been getting core aerated every year since ever, and the roots are not deeper than 3 inches. Would you pay for a product that got the roots down to 8 to 10 inches, and how much would you pay? And that's how we ended up getting into the organic lawn care business. We still use chemicals to control weeds and kill insects, but it was asking those questions to our customers or people who are potential customers. So it is, and that was a complete niche. Everybody thought we were crazy for offering such things because everyone had done mechanical aeration, mechanical dethatching, and we haven't done either one of those in 30 years. So
Yeah.
definitely, and that's just an example. I'm not telling you to go do organic lawn care, but just asking around and seeing what's different that could help your customers and help people that is not being offered in the market right now.
Yeah. Yeah, that's a big opportunity. And then the next stage, and this is something that I absolutely love, because it's all about strategy, is a business plan. So, a business plan is going to outline the company's goals, strategies, and financial projections, including funding requirements. So, putting a plan together that really defines who you are, what you're doing, what your goals are, what the stages of those goals are, and then, what does that tell you you're going to be able to achieve, when you're outlining these goals, and then also knowing what are your funding requirements. Like, do you need some capital? If so, how much capital? When are you going to be ready for that capital? When do you need that capital? So you're not automatically falling into that survival trap of, well, I need more revenue because we have this goal that's coming. And if that's the case, I'm all about self-funding a business startup and coming up with a plan to where you roll it out so smooth that it's paying for itself. That's the ideal situation. But if that's not what you're set up for, you need to make sure that you're not going to be spending your retirement, spending your personal funds, pulling money out of areas and getting yourself in debt because you're trying to meet those funding requirements in a business plan.
Yeah, and startup, you have to be realistic. I mean, if you're going to start a lawn care landscape business, you're going to need a truck, right? If you're going to do mowing, you're going to need two mowers because you always need a backup. If you're going to do landscape installation, you're going to need at least a skid steer or a tractor backhoe, which is one of my favorite like cheats for that because if you get a tractor backhoe, then you have a loader and you have something to dig with. Is it the most efficient all the time? No, but it's one tractor, one payment versus buying a skid steer and a mini X. To start with, it's okay to be a little less efficient if it meets your cash flow and your funding needs. So funding everything though, like you have to have an office, you have to have a computer. You have to have a place to store your tools and equipment. So, are you going to lease? Are you going to run it out of your house? What does that look like? Funding is and being realistic about it, like that truck, the trailers, the mowers, the skid steers, and making sure you have enough work to pay for that. Yeah, and people do dip into the retirement. I do not advise that. It's depending on any age, because if you're in your early to mid 30s, every dollar that you take out of your retirement is about $8 by the time you retire. So I don't advise, that's an 800%, interest rate. I do not advise that. You can get money for much cheaper than that. And just take your time and get the funding, get your truck, get your equipment, get on profit first, make sure everything, your allocations are correct and line up everything before you buy more. Because my business was growing, we had all this work, we are growing, and people were throwing money at me. Oh, we'll fund that, we'll fund that, we'll fund that. And then what happened was even though we were at profitable, it was just too much month at the end of the money. I couldn't generate enough profit to pay all the loans, and then we started in this fiber trap, taking more work to pay for the loans, and then we became unprofitable. And so, being really intentional with the funding and how you're going to pay it back is so important.
Yeah, and that's the next stage of the journey, right? It's funding. So it's startup companies, they may require, more funding at the beginning of the operations to launch, and you could get funding from various sources, from investors, banks, venture capitalists, maybe you have a partner that you go in business with. Just make sure, when you uh, do your partnership right, make sure that you guys sit down and you talk about all the ins and outs. And I have two successful partnerships, and that's one of the things that I know has really supported my partnerships, is setting down. And Steve, you and I even did this, and we said, what does this look like? What are you going to do in the business? What am I going to do in the business? How can we best show up from our strengths, and what should we not expect from each other based off of our weaknesses? And that has made it so easy for us to work together and make sure that, this has been a success. So, making sure that you're getting the funding from the right sources and what that looks like. So the
Yeah,
next stage in the journey is launch. Um, Steve, do you want to talk about how
yeah.
to
Launching
launch the company?
Launching is exciting, right? But it's a lot more work. When we launched Green Profit Academy, I hadn't started a new business in a long time. And I grew my other business really slowly, and we were growing Green Profit Academy much faster. And the launch, it takes, you need to make sure that you have your accountant on board, you have your attorney, you have a partnership agreement, or your if you're going to be a sole proprietor, make sure that you have all your tax stuff set up, and make sure that you have your QuickBooks are set up, or your accounting is set up correctly, your chart of accounts. And I would advise you right off the bat, to launch, do not try to be your own bookkeeper, or don't, drop that in someone in your family's lap, a wife, sister, mom. Get a professional bookkeeper. I would say one of the most important things to a new launched business is having correct financial information and data, and getting that done professionally. It's worth every penny, just to have real discussions. But just remember, you have your all five functions for this launch, right? Marketing, and that's going to take a longer runway than most people think. And marketing, I always promise people, marketing is more expensive than you thought. And it's going to be disappointing on the results because we have these high hopes. And then you have to have sales, deliverables, finance, and then the people. So the launch, there's a lot to getting a launch, and it really starts with a solid business plan and focusing on those five functions.
Yeah, and I think a good rule of thumb is, when you typically hear the horror stories that other entrepreneurs have gone through, or their challenges or trouble spots, those are areas of the business that were neglected. So through your launch, you want to make sure that you've completed your plan, whatever's necessary to cover those areas of the business. Like, do I have the right insurance in place? Am I obligated to pay sales tax, or is there local tax I need to pay? Because, that's extremely painful to find out on the other side, especially after, your first year in business. What equipment do I need? Who should I hire first? And who do I talk to? So making sure that when you launch your products and services, when you know what it's going to take to launch those, but what else needs to be in place to keep them successful, and not neglect that, because it will circle back if it's neglected, at the front side of the business.
Now, depending on your talent strengths, your Clifton talent strengths, or like your personality is, I have activators, my number one strength. So I'm going to launch and move forward before I'm really ready and I have all, my I's dotted and my T's crossed. If you have deliberative, you might actually take three times longer to launch, but you're going to be way more prepared. You're going to have your I's dotted, your T's crossed. But the point is just kind of be aware of your talent themes or your strengths, and make sure that you have someone on your team that is going to help you. Like, I need people who are strategic to help me see the details and to get things done. And if you're deliberative, where you're kind of like ready, aim, 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 you might need someone on your team to say, all right, shoot, let's go, let's get this thing moving. So, don't feel that you have to do the launch on your own. Even if you're going to be a solo entrepreneur, make sure you have someone on your team that can help you get through this.
Yeah. So the next stage of the business journey is growth. So a company will continue to grow through its marketing and sales strategies, even its strategic partners and product development. Growth is often pushed, by the owner as well. So either you're organically growing and you're so busy doing in the business that you're realizing, oh, we're growing, and then you're reacting to that, or you have your finger on the pulse and you are pushing the growth as an owner. And this is an area where you want to be deliberate. You want to be focused. You want to make sure that whatever energy and funds that you're pouring into this growth, that it's super efficient. And we've seen, Steve, several times where we've worked with businesses to where they handle growth like they've been handling their business, which is reactive versus responsive. And it's almost like that whack-a-mole process of tending to growth, to where like, we'll grow here, we'll grow here, we'll grow over there, we're going to throw money here. And there's no real intention around it.
Yeah, growth can be super exciting. I mean, I love growth, but growth without intention can lead to major problems. And as the company grows, it affects all five functions of the business. So you have to be aware of that. Hey, if we're growing, what does that mean to our marketing? What does that? We have to have more salespeople. We have to be more efficient. We have to deliver more products. We have to deliver more services. We have to have a better cash flow system, and we need more people. And that might mean training people better. That might mean bringing more people on. So growth, it shouldn't surprise us. You're going to grow a certain percent every year, hopefully, or you're not going to grow. And that could be a plan too, is to grow maybe in one part of your business and not another. I spent 5 years during one of my growth strategy plans. It wasn't to grow the top revenue, it was to replace like higher revenue sales dollars and reduce the lower revenue sales dollars. So every year, by a percentage, we would do less of the services that produce a lower gross profit margin, and we would do more services that produce the higher gross profit margin. Our top line didn't change. Our bottom line changed every year because we were making more money. So it wasn't just to grow for the sense of the top line, it was actually to grow the bottom line. So I had to learn to be very intentional with my growth.
Yeah, and I love that point that you shared, Steve, is sometimes growth in a company isn't about growing the dollars, but it's improving the systems and processes that you have. It could be improving your marketing, improving, your bottom revenue numbers, your gross profit margin, improving team engagement, how you do things in the business. So that can be growth too. So you don't need to grow your top dollars. You can grow your gross profit margin, and you can grow the structure, and improve that in your company. So I love talking about how growth can mean something different for everybody. And it's important, when we sit down with somebody that we're working with, to talk about what is growth to you? What's the most important growth in your business, and understand what that looks like.
And it's interesting because I've worked with businesses where the owner is top line focused growth. The top line growth is what he is, or they are focusing on the most. And they actually have the lower gross profit margin because that's not what they're focusing on. They'll have lower team engagement because that's not what they're focusing on. So even their top line grows, their bottom line is like shrinking every year because they don't have the engagement and they don't have the gross profit margin. But that's the mindset that they've bought into. So helping them shift their mindset to gross profit margins and team engagement, and then it's almost within 1 to 2 quarters that you see this change in net happen. It's the same product, same truck, same crew, same pricing, but they're just getting the pricing correct with doing more of the right
Mhm.
services, and their team's more engaged, so they're getting more productivity.
Yeah.
So expansion is next after growth, right? We figure out how to grow, and now we're going to expand the company. As a company continues to scale and increase profits, it may expand its operation by launching new products or services, opening new locations, or entering new markets. And all this sounds very exciting. But what do we need to know about expansion?
Yeah, so for expansion, this is the same to where it's like you want to respond and not react. So you could have, and we've seen this with several companies, is their success around growth has been from the demand of the market. And the market is saying, I need you, I need you, I need you, and there's this flood of calls coming into the business, and so they're like, oh, we're growing 10% more than we thought we would, or 20% more than we thought we would. And what they're really doing is they're responding to that demand in the market. And so then they throw people at it, they throw money at it, they throw equipment at it, services, and it can have a bigger impact on the business than a owner might think, because there's no intuitive actions going on, it's just reaction. So there's no plan in place for this expansion. So I would say there's two different types of expansion. There's intentional and unintentional. And the intentional can be a slippery slope if you don't have a plan in place. The unintentional could be just as harmful if you're not responding or reacting in the right way. So, we really want to look at how many people do we need to serve this. If we say yes to all of these customers that are demanding our services, what is that going to look like for our team? Do we have the capacity? How can we say yes without maxing out the capacity of our team? And do we have the funds to, in a healthy financial way, respond to this need in the business? Because just because people are coming to you and saying, hey, I need you, as instinctually as human beings, we want to say yes. We want to say, yes, I can help you. But that's not always the right answer, because it's more than just us that we have to think about in that moment. We have to think about the company and the health of the company, the longevity, and we need to think about our team members as well, because they're there rolling up their sleeves next to us and doing all the hard work. Where is the stress going to land? Because it's not just going to be on us as the owner.
Right, expansion can be exciting, but right, you're right that the stress and pressure lands on people on our team, in our company. It could land in our financials. It could land on, our facilities. So, expansion is exciting, but you really need to have all your ducks in a row and make sure that it's not going to crush what you're doing presently, and it needs to be strategic. I definitely love a 3 to 5 year plan on expansion, and then you can go through your 5 functions of business and make sure that you have a business plan for each one of those 5 functions in your business plan for that expansion. So after we expand or we don't expand, hopefully we make it to the maturity stage, right? I think only about 20% of businesses that start make it to maturity stage. And once the business reaches a steady rate of operation, it becomes more stable and less risky. What's the time frame for maturity, do you think, Christine?
I would say that depending on how intentional you are with your planning, it always takes about 2 to 3 years to fix something in a business that's wrong, right? Like if you're not managing the finances properly, it takes about, and this is looking at a business that's over 1 million, easy. It will take 2 to 3 years. So I could easily say it's going to take at least, a year for every 1 million that your business is at if something's wrong, up to a certain point. And so if you're working on a business and you're launching it, and it's going to take easily 2 years just to reach a steady state of operation and kind of get, the legs under you. And if you compare it to, let's say, starting a new employee in a business, that new employee, it's going to take them 1 year to really feel great at their job, to where they're like, I have this down. I've had this job for a year. I'm nailing it. Like I own this job, and they feel great at it. So if you're looking at a business and an organization and all of its moving parts, it's easily going to be 2 years before you start feeling like you're walking on steady ground. And then up to 5 years if you're diligent about the decisions and strategic planning, to where a company could reach a state of maturity, to where you're like, we've got our insurance in, we've got a growth plan in, we've got good benefits for our team. And this is in a perfect world, right? To where you could say, oh, my business is mature. But I could even say some businesses, we have an assessment that we do to find out like what areas of your business are mature, or which ones are still in infancy. And you could have areas of a business to where, the strategic planning's mature, your, operations is an adolescent stage, but your revenue management could still be in infancy. And it's going to create an effect on the different areas of the business until you get them all at one stage. So if you're really looking at a realistic world, I would say a 10-year business should be mature, but I guarantee it's not going to be mature in every area. So that's a
Right.
tough question.
Yeah, right. So every function of the business might not be mature. You might have some immaturity parts in that. And I think that's what I was going when I was recommending in the launch to make sure that you have professional bookkeeping, because that is probably one of the most things, regardless of the age of the business, when we start working with a new client, is the books are not correct. So even though
Yeah.
they're a 20-year business or a 25-year business, their books have not reached maturity because the data is not correct enough to actually make really sound decisions. So, or their marketing plan, they're still relying on, too much word of mouth marketing, and they're not reaching out to their current clients and communicating enough, so their marketing is immature, or whatever function is immature. So yeah, 10 years would be a great goal to reach for maturity. Absolutely.
Yep.
So after maturity, the last stage, the final stage of the business journey involves devising an exit strategy, such as selling the business or merging with another company. And that is terrifying for a lot of people. Tell us a little bit about that.
Yeah, so this is an interesting stage. I've had so many clients, come to me over the years to work with me because they start thinking about an exit strategy. They're older. Some event happens in their life. They realize that they don't have as much retirement as they need, and because they haven't been investing in it over the years. And then they realize really the only opportunity that they have to fund their retirement is to sell their business in the end. And what does that look like? So, having an exit strategy in place, it's important to do as soon as possible. Like, don't wait until that storm rolls in, or that bad situation, or that challenge. Start thinking about it now, just like you're thinking about, how do we make more money? How do we improve our gross profit margin? Start thinking about that exit strategy. What do you want your business to give back to you? Don't treat it like an ATM machine and then expect that it's going to, win you the lottery at the end of your game, because that's not going to happen. You have to be intentional about your exit strategy just as much as you are about everything else. And there's some great tax strategists out there. We work with a couple of them. Mary Pierce and Linda Staff, we've had many conversations with them about an exit strategy and what that looks like. And it doesn't take a lot. You could do a little to have a big impact on your retirement if you get in front of it now. And then just the way that you manage your books, like you were saying, make sure you have a bookkeeper in place, a professional, working with a professional. just having that in place, your books are an asset to your business in so many ways. Not only does it track your assets, it's tracking the most important asset, which is your business, which can set you up for retirement. So, making sure your business is in good financial health, implementing profit first in your business will ensure that, and having the books done by a professional will help you with this exit strategy to make sure it gives you back, the money that you deserve for all the hard work and sacrifice you've put over the years. You also want to identify like what stage in your life is going to be good for you to step aside. Like, when are you going to be ready? And what does that look like? Do you want to sell your business? Do you want to, hand it over to a family member to where they pay you a dividends because while they're running the business? Like, what does that look like for you? And start thinking about that now. And even over the years, it's something I know I've been thinking about, for the last 15 years in my business. What does that look like? And kind of envisioning that. How do I want to exit my business? And if I do, what's next for me if I don't feel fulfilled? Thinking about those things. And Steve, I know you have as well. Like, what does this look like for you?
Yeah, there's a lot to think about. And just getting back to the bookkeeping for a minute, it's interesting. So we had multiple conversations this week, and having good, clean books that actually provide correct data can increase the value of a business by 25 to 30%. Because all the balance sheet's correct, it shows all the assets, it shows all the depreciation, P&L is correct, everything that is above the line, it is that's supposed to be there, and COGS, cost of goods sold, is there, and the more it gets mixed up and it's incorrect, it devalues the price of the business because the data is not accurate enough to actually do a correct evaluation. So making sure that your books are clean and healthy is a big point. But the exit strategy can be very daunting. Just thinking about it, is a family member going to take it over? How do you exchange that money? Are you going to sell it outright and be realistic? Are you going to sell it 3 times earnings, 5 times earnings? Somebody will want 20 times the gross revenue, which is just unrealistic in the green industry. So you have to do your research. I recommend talking to a broker, talking to an accountant, working with attorneys, and it's your future. So, but also, I would not recommend counting solely on your business as your only form of retirement. Having other investments, IRA, 401ks, I bonds, CDs, whatever you feel comfortable with, but making sure that you're putting money aside for that, because when you do sell your business, you don't want it to be you don't want to be out of control with it, in need of selling it so bad because it's the only money you're going to have in retirement. You want to get a higher value for it because you don't desperately need to sell it. So you don't want to put yourself in a bad situation. But it's scary. Start thinking about it now, and it's just a continuation of discussions because there's different opportunities that come up during the life cycle of the business.
Yeah. And you can't wait for opportunities. Yeah. You must get up and make them happen.
Absolutely. Yeah. Don't wait. So if you're not a get up and go person, you want to think and think and think and think about it. Get somebody on your team. Think about it and think about it, but get somebody on your team that can help you move things along. All right. So we're going to talk about what common mistakes business owners make on their business journey. And there are plenty. So the first one is simply lack of planning. So many business owners start their journey without a clear path for their business. This could lead to poor decision making, lack of direction, and low performance. Just not understanding who their target market is, it's essential to understand the target market and who they need to cater to and what the preferences and needs of that target market is. My whole business plan when I started my lawn care business was to get 8 accounts that paid me $25, and I could cut them in 2 or 3 days for $200, and that would make me more money than the minimum wage job I was working as a teenager. So that was my business plan, which I reached very quickly, but I didn't have much of a plan past that.
Yeah, and typically we find business owners that come to us, they don't have a business plan in place. They might have, they're like, well, I did write down like kind of what our values are. And we do want to make, grow 10% this year or whatever it is. But when you really get into the details of it, there is no planning in place. There's not the key, KPIs that are sitting there for them to track. They don't know how to track them. There is nothing put into place. And sometimes that business plan concept can be very overwhelming to where a business owner can, kind of get into that thought, that frame of mind to where they say, well, that might work for other people, but it doesn't work for me just because it seems so overwhelming. And it's something that it is a strength of mine to where I can sit down and I get really energized pulling together a strategic business plan and seeing what that looks like. And I realize for other people, it's exhausting for them and it's overwhelming for them. And which is why I love the workshop that we created, which was inspired by these business owners that said, oh, this was really hard. But after we did that, I had my business plan together. And, it was 6 workshops that we did, 6 calls. And by the end of it, they had all the things they needed for their business plan, which most of them never had before, which is fantastic. So don't let the idea of a business plan, being overwhelming, stop you from having one, because it will get you there faster and it will make it easier to, get to where you're going.
Yeah, so the workshop, you're referring to, it creates a mission, vision, purpose, and immutable laws. Because a lot of people think their business plan is revenue, only revenue based, but having a mission of, what is the business about, the vision, where is it going, and the purpose, why are we here? Why do we even
Mhm.
exist? And then also having immutable laws that the company is going to run by. These are things that we, are not going to, we stand for that. We're not going to tolerate anything that goes against our immutable laws. And that helps a company stand strong. It's easy to set like revenue goals, but the hard work is the mission, vision, purpose, and immutable laws. But that's so foundational to a company. And I would guess probably only 20% of all businesses have mission, vision, and purpose. And the mission has to be real honest and true. A lot of times I'll see the mission, it's a really corporate sounding and it doesn't connect to their customers, it doesn't connect to their employees, it doesn't connect to even themselves. It's it's be the best in this and that, and it's not measurable. So missions
Yeah.
need to be, they need to be infinite, but they need to have some type of impact. And being the best in the market without being specific what you're going to be the best at, the best in communication, the best in knowledge, the best in quality, being really broad and non-specific, it's hard to be that in a solid mission plan because a mission is something to rally around. And if
Mhm.
the mission is not like specific and it's just broad and people cannot buy into it, it's hard to get people to rally around.
Yeah,
All
and
right.
and the other things that we unpack in there is benchmarking. So where are you at now? This year, where we at the year before, so you can grow and measure what you're growing in your company, so you know where you've been. And then we also unpack goals, because that goal setting part, I think, is one of the biggest challenges too. It could be just as hard as defining like what you stand for and who you serve, is understanding, well, how do we line up our goals or separate out or build our goals in a structured way to where we can achieve them. And that can be really hard for people too. So yeah, by the end of that, they not only have their values and their mission, they also have their measurables and then their goals on how to meet the next stage of their business, like what's missing.
Yeah.
So yeah, that's one of my favorite workshops. I love that one.
And you brought up KPI, and KPI stands for key performance indicators. So it's ways of tracking performance. And That way you can measure it. It's a little bit of a lagging indicator, but it lets you set up your goals and performance for the next time period. It could be a week, a month, a quarter, or a year. But KPIs are super, super important. It lets everybody know what the score is.
Yep.
So another mistake is failure to differentiate. It's crucial for our business owners to differentiate themselves from their competitors. If they fail to differentiate their products, services, or brand, their businesses will be seen as just another competitor, which leads to substantial difficulties. Basically, they become another commodity. Now it's a
Mhm.
price war.
Right. Yeah. And you don't want to be known for, well, I'm the cheapest in my market. You may want to be known for your quality of service that you provide and your reliability. And I know these days in the market, it is so hard to find someone you can rely on in the industry, even to show up when they say they're going to show up or do what they say they're going to do. And I know myself, I have pointed out things working with contractors to where, at the beginning they say, oh, we're going to do this, this, and this, and then afterwards they don't do that. I find that maybe they're painting or staining a patio or something, and then they end up getting stain all over my $400 planter or something like that was installed, and they're like, oh well, we didn't cover it and that's not our problem. And so that reliability could be something that is you're known for, to where you do what you say you're going to do and you show up when you say you're going to show up. So making sure that you're not a commodity in your industry, that could make you the expert in your field and the most reliable, to where they're constantly calling you.
And differentiation is one of my favorite topics in for lawn care landscape businesses. And it starts with marketing. For years, when I sold, I drove a Mustang. I wear a fedora, a button-down LL Bean shirt, logoed, and people remember the guy that shows up in a Mustang, all logoed up in a fedora versus just another guy in a pickup truck. And it kind of started there. And the differentiation, we have someone in the company, her whole job, it's inbound calls, just to take inbound calls. And that's different, not only for lawn care and landscape businesses, for all businesses, and how we even approach our program, how we build people. One thing that I love hearing is they'll be like, well, nobody else does it that way. When I hear that, I know I'm on the right track. And one of my favorite sayings is, I don't know who the quote is, but they laughed at me because I'm different, and I laugh at them because they're all the same. So, be who you are, and that differentiation will come out. Don't try to be like any other company. Customers will resonate. It resonates more with customers if you're your true, authentic self. And it will also resonate with your team, your employees, your vendors, and everybody in your life. So be you and let that, shine through in the company that you're building.
So the next stage is overestimating revenue. So this is another mistake that they can make. So overestimating revenue. Business owners sometimes overestimate the revenue and make spending decisions based on unrealistic revenue expectations. And I would say this is probably one of the biggest culprits in a business, is not understanding, how to manage your money in your business and what it can do for you, and even the return on investment, the ROI, when you are spending that revenue. So this is, I think, where Profit First really solves this problem, is understanding what revenue you have, what areas of your business that you should spend it in, and you're not being reactive to your cash management. You're being responsive, and you have a really great strategy in place to do that. And the other thing I love about Profit First is not only does it allow you to, figure out, where do I need to spend to keep my business healthy? What's allowable in these different areas of your business? So as business owners, we're not driving that spend emotionally. We're being analytical about it. But the profit first system, and I talk about this in the book, and I feel like it's one of the least talked about things that the profit first system can do. And its magic is that ability to use your allocation percentages for a healthy company to do projections and to see, do we have the budget for this year? What does that look like? What top line revenue would we have to make in order to fund our payroll, our equipment account to that degree to where we can plan for this? So it really helps you properly estimate your revenue versus just being reactive and overestimating it based off of what we have in our head and tied to our emotions.
Yeah. And the overestimating revenue is an issue, and we use the profit first for projections. The whole cash flow model, it comes out, it's beautiful, and it shows like if we increase, that's how we determined how much we could give in raises this year was through our profit first calculator, and we raised prices, and this is if everything else increased X, what would we have available for payroll? So very strategic and logical way of, coming up with budgets. Another big kind of challenge in business is lack of focus, right? Many businesses try to offer too many things at once. It can lead to a lack of focus, can lead to confusion, inability to cater to the needs of their target market. So somebody asks them to do another service and they start doing that. And it's in Mike's pumpkin plan book, about the guy who's a landscaper, and then he starts fixing the shingle and the chimney and all this stuff, and it's very inefficient. I know I've done it. We're not profitable at this, add a service, not profitable at that, add a service, and you start to dilute the talent in the company, and you start to dilute your capital. So loss of focus is a major issue and could be a major problem.
Yeah, and it can not only confuse your employees that are working for you, it could include confuse your customers as well. So where they're like, I don't understand. I thought they did landscaping. Why are they cleaning the chimney too? Or, oh, they could clean my gutters. I thought they just did lawn application. So it can confuse not only your team, but it can confuse your customers as well in the market.
Yeah, absolutely. And another one is ignoring customers' feedback. So customers, they give us feedback. It's super valuable to the business owner, and ignoring this feedback and not taking it seriously could lead to poor customer relationship and low sales because you're not getting repeat sales. And it's hard to hear different people. Like everyone I work with in consulting and coaching over the past 20 years has told me I'm always the most expensive person in my market because customers are telling them you're too expensive, you're too expensive. That is one of the feedbacks that I think a customer has to say. They feel as a consumer. So I can always find somebody who's more expensive than me, more expensive than them in their market. So that's one feedback I kind of take with a grain of salt. But other feedback like I wasn't notified, or the contract wasn't clear, or I didn't get good instructions on how to take care of the plants after you left. So we made videos, we have handouts, we have sheets. And even as much as we try that, there's still a percentage of people that need a little bit more attention. So listening to this customer feedback and if it's a trend, we really pay attention to it. If it's an event, so it's a one-off thing, we just kind of deal with it one-on-one. So if it's a trend, really, let your ears perk up and take action. But if it's a one-off event, make sure you're not like changing all your strategy, policies, and procedures for a one-time complaint.
Yep. So the next challenge and mistake that could be made is inadequate marketing. So lack of marketing can hinder any business's growth. The failure to promote products and services to the right audience can lead to poor sales and low brand recognition. And I feel like this is a topic we talk about a lot, Steve, and it is an area that could be really misunderstood of what you have to do, what you need to do, what you're obligated to do. And I think the brand recognition is a big piece of it. Like, make sure you have a consistent brand that stands out. And it's not just what your brand looks like, it's also how your brand shows up. So making sure that your team understand this is what who we are, how we show up, because the brand is more than just the colors and the logo and getting it out there in the community. It's also a reputation that you have to think about is how do our team show up, and how can we get better brand recognition, by our reputation. So, that's another opportunity, is making sure that your marketing, if you say we show up and we do great service and that's your marketing, you better make sure you show up and provide great service. So you got to walk the talk.
Yeah. I think the biggest mistake is not paying attention to your reputation, like Christine said, make sure your doors are shut when your guys are working so there's paper and garbage and bottles aren't falling out of the truck. That's part, people see that. That's part of representing your reputation in the community, not cutting people off in traffic. There's like little things that, because most landscapers, we're working in a community or a local area. We're not World Wide Web. We're not working, the whole state, the whole country. And we're working where people know us and see us. So making sure you're just clean and polite, your trucks are marked, you guys have uniforms, you return phone calls. That reputation marketing is huge and probably the most least talked about, but it's probably the most important of all. And people, the other mistake, people think they're going to do a thing like send a postcard out and it's going to get them all this work. Marketing is, 12 months a year and it's all the time, everything you do. It's not a postcard, it's not a Facebook ad, one thing. And the other thing with marketing, we need to dig the well before we're thirsty. So, marketing is a long-term play. It's not, like I said, it's not a postcard or an ad. It's long-term. People have to see our name about 27 times before they even put the name together with what we do. So, make sure we're setting our expectations is really important. Another one is just poor decision making, right? In general, a mistake. Poor decision making can have substantial consequences over any business. Investing in projects, poor hiring, not being able to pivot when the business needs to, can lead to significant losses. Bad hiring can really hurt a business. Uh,
Mm-hmm.
so having some type of decision tree or some type of decision process is really important.
Yeah, just having processes to where it's like you're removing the decision, certain decisions. So making sure you have a hiring process, an onboarding process, making sure that if you are going to invest in a project, you know how much it's going to cost, what's the lead time, and be realistic. Like any change in a business, and I've said this before, it takes a year for that change to take hold. And this is the planning of it, the rollout of it, the adoption of it. And you need to make sure that you find a champion to do that in your business. And it is not you, because the business owner has enough to do. So making sure that you're making the right decisions for the good of all, and not just based off of, well, I want this and I'm the owner, so I'm going to put my foot down and make sure that it happens.
Yes, the next problem or error people make is not understanding finances, and that's one that I made. I think that we run into it almost on a daily basis as we coach and consult people. And that starts with having good numbers that the data actually means something and it's correct, but just not understanding or even wanting to understand what the P&L means or the balance sheet. I mean, I was in business for 28 years before I understood how to use the balance sheet as a tool. And, now since then, now this is 40 years, we're celebrating in 2023. Using that balance sheet as a tool is an amazing advantage for me as far as like my growing my company, communicating with lenders, vendors, and even like how to communicate and budget with my team and plan for the future. So not
Mhm.
understanding finances is a huge, huge issue. And, you can really start by reading The Profit First for lawn care and landscape businesses. It's a good first step towards financial education.
Yeah. And then the last one is in the challenges is burnout. And I know, Steve, you've been there, I've been there, several of our clients have been there. So it's very common for many entrepreneurs to neglect their personal well-being and work excessively, which can result in burnout and, leading to decreased performance or productivity. And also, neglect of family, not being able to be there for your family or for your children, the way that, we should as parents, or our spouses. And, and using the business as an excuse, like, oh, I need to work this many hours. I need to do this. I need to do that. Everything needs the love and attention, in a moderate form. So making sure that you're not sacrificing your well-being for your business, or sacrificing your family for your business. So making sure that, when it comes to the amount of hours that you work, that you're mindful and taking time out. And I've done this before where I had to learn taking time out will allow you to show up stronger next time, and not make as many mistakes. So burnout is a huge issue with entrepreneurs. We give and give and give until we run out of gas.
Yeah, and we were on a business retreat a few years ago, and I think 90% of the business owners there had some form of burnout. And a lot of it, I was completely codependent on my business, and it always needed me. I was always the hero. So my business was a great place to be for me all the time because that's where I was a rock star, in my own mind, at least. And it always needed me more. And that's what, the American dream is, have a business and work, work, work 65 to 80 hours a week is kind of like a badge of honor. But, it was only until a few years ago in 2019 where I stopped working, even on Sundays. And I didn't need to work on Sundays, but it had become such a habit. It was ridiculous that I was even doing it, but it just was what we had become accustomed to. And, my wife said, I don't want to do this anymore on Sundays. And that was the last day that we did work on Sundays. So I needed her to kind of open my eyes. And I was a little bit ashamed of myself. Like, yeah, why are we doing this? Why are we continuing to do this beyond the point of needing it? But it was that codependency of the business that I had to get
Yeah.
over. And I actually had a breakup song with my business. And it helped me to kind of like realize that, okay, you're all grown up, you don't need me on a Sunday anymore, and I can go do other things, and the business has been better for it, and I've been better for it.
Yeah, and there could be several reasons why business owners make common mistakes on their business journey. And I just kind of want to, go over these quickly here because I know we're coming close to our time. Is it could be lack of experience. So something, as easy as I don't have the experience. I don't know. I don't know what I don't know is one of our, common sayings. Insufficient planning. So being intimidated by planning, or feeling like they don't have time to plan their business journey. It's not in their strengths. Poor decision making. So, we talked about that, of not making the right decisions at the right time, and the estimation of effort, the lack of resources. So, failing, to hire the right people, or investing in the wrong areas of your business. You could be investing in a new service product when really what you need to be investing is getting your accounting cleaned up, because your numbers can't tell you what your most profitable service is. And another one is, overconfidence. I'd probably say also underconfidence. So not being confident enough, or being too confident. So these can lead to common mistakes that create unnecessary risks, and even overlooking potential issues is that area of too much confidence or too little confidence. And then the last one would be inability to adapt. So, owners kind of get stuck in their ways. They sink into it and they say, this is how I am. I'm not going to change anything. They're super stubborn, old school. And these can create failure, or a path to failure for the business by not implementing strategies, lack of team engagement, you're just really buckling down on old school ideas. So that can set you up for failure as well.
All right. You must remain focused on your journey to greatness. It isn't about playing small, it's about finding your greatness, your own greatness.
Yep. So I just kind of want to go over what we went over today. So our focus was on the stages of a business journey, and this was step one, idea generation. Two, feasibly do a feasible study. Three, have a business plan. Four, know your funding. Five, what's your launch looks like. Six, growth. What does growth mean to you? Expansion. So if you do expand, have a plan in place, make sure it's not going to break the bank. And then what does maturity look like in your business? So making sure that your goals set you up to reach maturity as a business. And then the last one is exit strategy. So these are the stages a business goes through from inception to success. And then Steve, I'll have you share the challenges. What are the hit points for some of the common mistakes that businesses owners make on their business journey?
So the biggest mistakes or common mistakes people make are lack of planning, failure to differentiate, overestimating revenue, lack of focus, ignoring customer feedback, and more. Inadequate marketing, poor decision making, not understanding finances, and burnout. And the supporting kind of data on that is lack of experience, poor decision making, lack of resources, overconfidence, or inability or stubbornness to adapt. All right, we are coming to the end of today's podcast. If you have listened all the way to the end, you are an awesome trooper and believer in small business. And we want to thank you for that. And we hope you have learned quite a bit today. It was our pleasure to share this, and we appreciate you. And tune in to the next podcast. Thanks, Christine.
Thanks. Have a great day.
Thanks for listening to the Green Profit Academy Pros Podcast,
the show that digs into the challenges of growing a lawn care and landscape business while maximizing your profit.